Good afternoon and welcome to Markets Today. I'm your host, Mbithe Muema. Today's a very interesting Wednesday. The budget process has just kick-started with stakeholder meetings ongoing from today through to Friday. We will be giving you an overview of what the CS Treasury commentaries have been with regards to the direction that this budget process for this year should look like. Before that, let's give you an overview of what happened on the Nairobi Securities Exchange yesterday. Yesterday, turnover was down 10% on a day-to-day basis, with investors trading 771.5 million in terms of turnover over the day. The top traded counters were KCB and Safaricom. NCBA was also a surprise mover there, as well as Kenya Re. KCB traded about 6.8 million shares at a lower price of 53.70. This was slightly lower than what it traded in the previous day, which was at a price of 54.5. Safaricom came in second with a price of 32.75 shillings over the day. Surprise mover for the day was NCBA with about 1.3 million shares traded at 36 shillings over the day, and Kenya Re about 900, slightly below 900,000 shares were traded. Today, the activity is expected to close with a near 50-50 split between the local investors and the foreign investors. We'll keep you updated as the market closes later on in the show. Now, going back to the budget process, it has just kick-started with a three-day meeting of stakeholders, with the government taking in proposals from the public with regards to the outlook of the budget for the 2020-2021 year. Now, the latest we've had is the Honorable Ambassador C.S. Okoth Yatani gave his opening speeches earlier in the day. His key thing was really he wants to have an austere government. He wants to drive the deficit downwards. The key things that we took out were three mainly. Firstly, he does want to take the GDP growth to about 7% in the medium term, and that's within the next 2 to 3 years. And his focus is actually on cutting back expenditure. And during his tenure, he wants to bring down the budget deficit to 3.5% as a percentage of GDP. And as well as that, he also wants to bring down expenditure to 23% as a percentage of GDP. Now, these are very aggressive figures coming from his end. And this is also in line with the fact that the bulk of the budget expenditure, almost a third of the budget expenditure, solely goes to debt repayments. Now, how will he be able to maneuver into taking the government to a better place with regards to the budget deficit? Some of the options that he has is really been very strict with regards to his wage payments and cutting back the wage bill of the government. Other than that, he could actually go in line with what the president said yesterday during his State of the Nation address. The president said that he has a plan to roll out an infrastructure bond of 150 billion shillings. Now, if this comes to fruition, then we could see him extending the tenor of the finance bill, not the finance bill, the outstanding government debt. If this happens, then it could actually give C.S. Yatani the leeway to be able to cut back on his expenditure for this year by refinancing his existing debt. We await to see what the stakeholder engagements bring forth, and we will keep you updated. But what we want you to tell us, do you think his pronouncements are feasible, or is it just theoretical? Could it be very different on the ground? What are your thoughts? Engage with us. We are live on Twitter, and that's Metropole TV. That's our Twitter handle. Tell us what your thoughts are. And finally, when we're looking at the NSC, the other news that we've had with regards to corporate affairs is we expect to see about 300 billion extended to the private sector by the Kenyan banks. Now, this is certainly much higher than what we saw last year. The latest numbers being 6.2% growth with regards to credit that were extended to the banking sector. How can the banking sector do this in light of the fact that the economy is not doing too well, but there's hope that it could do better? How can they avert non-performing loans and extending credit to the wrong people? Is there any right way to do it? We've suddenly seen the onset of technology in the banking sector. It has been a push, it has been a positive push with regards to revenues, especially non-funded revenues. What does technology portend for the banking sector? That's a discussion that we want to have later on in the show. In studio, we are joined by Mr. Kevin Ayugi. He is the head of digital channels at Family Bank. We'll be looking at the financial trends in the banking sector. Where have we come from? Where are we? Where could we go to? And really, what does this mean for the bottom line? We take a short break. Don't go anywhere. See you shortly. Engage with us. Tell us what more you would like to know. See you in a few seconds.